Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi guys, I'm Daniel LeBeau, and welcome back to Top Stock Picks of the Week. My pick today is Jabil, ticker JBL, not to be confused with the audio company. So Jabil is one of the largest electronic manufacturing companies in the world. They service a wide variety of industries and focus on design, manufacturing, as well as supply chain and product management services. The company has over 100 plants in 29 different countries and employs over 200,000 employees. So this is a innovation-driven manufacturer, and it's, like I said, its customers range in a wide variety of different segments. And mobility, healthcare, and cloud technology have been the three largest drivers for the company in 2020. And this company is very adaptable. It's focused on the next generation of productivity and the next generation of manufacturing. It's partnered with the world's strongest brands, including Apple, Cisco, and Johnson & Johnson. And the company has illustrated a top line that continues to expand. It's had 6 years of consecutive record sales, and this year is no exception, with its fiscal year ending in August, and it illustrated $27 billion in sales, which was an 8% growth from the previous year. The company continues to show strong liquidity for opportunities to grow both organically as well as through acquisition. It has over $1 billion in cash and equivalents, as well as a consistently strong free cash flow. So let's dive into the charts and check out the opportunity a little bit deeper. So despite this company being able to stay buoyant financially, its stock took a pretty massive dip off of these highs in December. And it started before the pandemic sell-off, after kind of a worse than expected earnings in December, and just leveled off with the rest of the pandemic, trading down to under $18 a share. And since then, we've seen a huge bounce back, not quite back up to the $44 a share we saw back in December of 2019, but we are back up to over $35 a share. And we've kind of been trading in this range between $30 and $35, for the last 5 months or so, since May. And you can see that, this is kind of derived from this Fibonacci retracement, which I drew up, a little bit of a spiky, quote unquote, level basis here, but we look to be finally starting to break out of our trading rut that we've seen since the end of May. And I think right now is a great time to jump into this lucrative stock, and it's trading at a very good multiple right now. It's a value play, and I think that's what we're looking for as this economy starts to recover much more quickly than we anticipated. So analysts have been increasingly optimistic about the future of this company, raising their EPS estimates for the years to come, pushing this stock up into a Zacks rank #1 strong buy. And we're still trading quite a bit below our average price target, which is north of 40, and actually it's above. The majority of these price targets are above what we saw in December. So there is a sizable upside here, and right now 4 out of 6 analysts are calling this a strong buy, and I would tend to agree with that. I think the stock has a huge amount of upside potential, and I wouldn't miss this cyclical train as the economy recovers, like I said. So thanks. I'm going to hand this over to Nina now with her top stock pick.
Thanks, Dan. My top pick this week is Best Buy, ticker symbol BPY. And as we all know, Best Buy is a retailer of consumer electronics and other home office products, entertainment, software, other products as well. Now, we know that it has been a tough environment for retailers in this era of online shopping, but Best Buy has been able to compete with Amazon, and there are some reasons behind that. Best Buy provides its customer the option to pick up in store in addition to home delivery, and according to the company, 70% of population lives within 10 miles of a Best Buy store. So that has helped the retailer to improve its e-commerce operations because shoppers can purchase online and pick up from a nearby Best Buy store within 2 days in most cases. And in most cases, they match Amazon's or other competitors' prices. And of late, they have also added many third-party pickup location for online orders to provide, more flexibility and convenience to consumers. And in fact, it now has more than 16,000 pickup locations covering 85% of the population within 5 miles. And during the past few years, they have solidified their grip on appliances and electronics market by improving their merchandise and marketing and in-store shopping experience. And we know that for buying, expensive appliances or electronics, if you want to buy a TV or a washing machine, you want to go and take a look in store and then buy it. So uh, that is why Best Buy has been able to, solidify its grip on appliance and electronics market. And they also have built kind of personal relationships with consumers through services like Geek Squad. So that also has benefited them. Now they have been able to beat the odds during the pandemic, and that we saw from the second quarter results because they were able to beat Zacks consensus estimates both on the top and bottom lines. And in fact, it was the 11th consecutive quarter of earnings beat. We know that most people are working from home, most students are attending virtual classes, so they need more computers, laptops, iPads, printers, scanners, routers. So that has benefited Best Buy. People are also buying more video games, consoles to entertain themselves, more kitchen appliances because they're cooking at home. So all those sales of all those items, appliances, they soared during the second quarter. And in fact, online sales were up 242% year over year. And yeah, it is true that some of the demand has been pulled from the coming quarters. But we know that the remote working trend may continue even after we get to the other side of this crisis. And the company has also reported strong demand for some of the newer categories, such as digital health and fitness, because people are working out at home. They also reported higher sales for outdoor activities, camping equipment. So these categories may see higher demand in the coming quarters as well. Now, I wanted to show some of the charts by going to code page on Zacks.com. So I wanted to show the increase in estimates page, increase in estimates. So you can go to detail estimates tab and you can see the increase in estimates by analyst after the second quarter result. You will see that estimates for the current year and next year have gone up significantly, and that is why Best Buy is a rank one strong buy stock as of now. I also wanted to show this price consensus and EPS surprise chart because it's beautiful, a lot of greens. The company has missed only once in the past 5 years. Now, another reason why I like Best Buy is because they have been returning a lot of cash to shareholders in the form of dividends and share buybacks. And the current dividend yield is 1.9%, pretty attractive, pretty juicy. And as I mentioned, it's a rank one stock with nice style scores: B for value, A for growth, C for momentum, and it is trading at a forward P multiple of 16.3, which is not too expensive, so definitely worth a look because of the reasons that I mentioned. The industry ranks and the sector rank, they also look pretty good. Industry rank in the top 11% and sector rank in the top 13%. So that's all I have for Best Buy. Thanks for watching, and we'll see you next week.